So today we are moving on to chapter 4, and in chapter 4 we're looking at, we're doing business maths. So the first section is on percentages. This is a reasonably big section, the first bit, so don't be overwhelmed by it. There's a fair bit in the instructions, so you might need to fast forward the video or pause the video at times and stop to take notes, write stuff down. You might need to go back and look over some bits. Okay, so I'm going to go through this reasonably quickly. The first bit we're looking at is discounts and markups, and we're going to look at discounts. So a discount is when you're taking something off a price. So like when you go to Target and you're 15% off everything, that is a discount. So here, if we've got a 12% discount, then that means we're paying 88%. So that means a 12% discount is times 0.88, because that's what you're paying. So say we've got an item for $50, okay, we've got an item for $50 and we're paying 88%, or we've got 12% off. Then we pay 50 times 0.88, and we're paying $44. Okay, so $50, there's 12% off. Okay, so we're paying $44. We just multiply by 0.88 because there's a 12% discount. 100 minus 12 is 88, and that's where that number comes from. Okay, so the actual discount, this is this formula here, the actual discount then is $44, just the 50 minus 44, and what we've just calculated down here is the new price. So we've got an 8% discount, so I'm slightly different to this formula. If we've got an 8% discount, that means we're paying for 92%. So an 8% discount, we multiply by 0.92. So 50 times 0.92, and that's $46. So that's what we pay. That's the sale price, the new price. Okay, so the actual discount is 50 minus the 46, so there's a $4 discount here. So we can work that out. So a 25% discount means we pay 75%, so it's times 0.75. So we just always go 100 minus this value. 100 minus 25% is 75%. So it's times 0.75. The $50 item with 25% off is 50 times 0.75, and that equals $37.50. So the discount is 50 minus the $37.50, which is $12.50, and the new price is this $37.50. So now we look at markups. Markups are when you might be in a shop, you buy something in and you're going to mark it up so you get a profit. Okay, so if we've got a 10% markup, the only difference with markup, these formulas you'll see are the same, except for it's got the word increase instead of discount, and we're adding. Okay, so we're adding on. So 10% markup is going to be times 1.10. Okay, 1 is for the original price and 10% extra. 1.10. The original plus 10%. So here, the markup is going to be times 1.17. Okay, so the original price plus 17%, so 1.17. So a 72% markup would be 1.72. The original plus the extra 72% we've added on. So we've got our $50 item, and we go 50 times 1.10. It's going to get marked up to $55. So there's a $5 profit. That's the increase is $5. Okay, so if we've got a 17% markup, we go 50 times 1.17, and we get $58.50. So the increase is $8.50, that one minus that one, and the new price is the $58.50. Okay, so a 72% markup, we've got the 50 times the 1.72 on the calculator. 50 times 1.72 is $86. So the increase is going to be $36. 86 minus 50 is $36, and the new price is $86. Okay. Now, just as a little aside, if we had a 100% markup, that would be times 2, because we've got the original plus another lot of the original. So we're just 100% markup is doubling. Okay, just got to make a little change here. So just get rid of that. So the next bit we're looking at is percent change. So percent change, in the book, I'm doing this slightly differently to the book. So in the book, percent change is presented with two formulas. One's for a percent increase and one's for a percent discount. So these are the formulas on page 166 of the book. I'm just presenting them as one formula. So the increase is the change, or the decrease, or the discount is the change. Okay, so I'm just presenting it as one formula. It does the same thing. So we just have the change, the increase or the decrease, divided by the original price. This is always the original price, and we just times it by 100 to make it a percentage. Okay, so if we've got something decreasing from $54 down to $38, that's going to be minus 16. So the percent change is going to be 16. It's changed by 16 divided by the original 54, and we times by 100 to make it a percent. So on my calculator, 16 divided by 54 and times 100 to get 29.6%. So that's the percent change, is a 29.6% change. Okay, so if something increases from 124 to 130, okay, so it's going to go up by 6. So the percent change is just 6 over 124 times 100 over 1. On the calculator, 6 divided by 124 times 100 is going to be a 4.8% change. Okay, so that's percent change. As I said, just if you need to make notes or anything, just pause the video and go back and look at it any time. Okay, so if we want to calculate the original price of something, then we just divide by either the discount or the increase. Okay, so if something was bought on sale, so 15% off sale, and you paid $72, then the original price is going to be just the new price, which is $72, times 100 divided by 15. And put that in the calculator, and that's not right. What have I done wrong? Okay, I didn't look at my formula. So what we're going to be doing down the bottom, if it's 15% off, sorry, I made that error, it's 15% off, that means we pay 85%, so it's 100 divided by 85, so 100 minus 80 on the bottom, so 100 minus 15 is 85, sorry, my error, 72 times 100 divided by 85 and we get, that was originally $84.71. Okay, so something's being marked up by 32% and is now, so it's now, let's say it's $110. Then originally, okay, so this is what it was before. It was a bit lower, it was being marked up by 32%. So originally, so we go the new price, which is 110, times 100, divided by 100 plus R, so 132, and in my calculator, I get, it was originally $83.33. Okay, two more little bits to look at. The first one is the GST, the Goods and Services Tax. So in Australia, GST is 10%, which means if you've got something you want to sell, and you're going to earn over a certain amount, if you've got something you want to sell and you have to charge a GST, you have to add 10% to the price. Okay, and that 10% goes to the government as a tax. Okay, in Australia it's a GST, Goods and Services Tax, and it's 10%. In other countries it's got different values, 12.5%, 15%, things like that. Some other countries it's called a VAT, a Value Added Tax, which is an interesting name because they don't actually add any value, they just add charge to it, which I suppose that's what they mean. So if we have something for sale and it is $37, then we need to go plus a GST, so we need to times it by 1.10 because we're increasing it by 10%, and so we get 37 times 1.10, and it's $40.70 including GST. Okay, so sometimes people or businesses are tax exempt, so they don't have to actually pay the GST, but the GST is inbuilt onto the price of goods. So say something is $150 and that includes GST, and if someone was tax exempt, then if they want to work out how much they have to pay, they have to go the other way and divide by 1.10. So we divide by 1.10, and in the calculator, 150 divided by 1.10, and we get that it's $136 and 36 cents GST free. Okay, so nice and easy, copy this into your bound reference. We times 1.10 to work out, to add the GST on, we divide by 1.10 to get rid of the GST. An example on GST here, just working out the amount of GST. So in that previous example we're working out the cost of the goods, which either includes or doesn't include GST. Here we're just working out the amount of the GST. So if something hasn't got GST and we want to work out the GST, we just divide by 10. If something's got GST and we want to work out what the GST is, we divide by 11. Okay, so we'll look at a couple of examples. The first one is an electricity bill, $288.50, and that's without GST. So to work out with GST, we're just going to go $288.50 divided by 10, and that means the GST is going to be $28.50. Okay, just that number divided by 10, that's the GST. Okay, then that will get added on to give the total amount of the bill. So our second example, we've got a selling price. So a selling price would include GST. The washing machine is $999. What is the price without GST? So we just go 990 divided by 11 and we get $900, sorry. Sorry, we're dividing by 1.1 because what we're doing, let's just go back and check that example. So what we're doing is working out the price without GST. So we're going back to what we did here, dividing by 1.1. So we go the $900 divided by 1.1 gives us $90 divided by 1.1 gives us, that's $900 GST free. So the GST equals $90, the difference between the two. Okay, so GST calculations are reasonably easy to do. Last little section involves shares and dividends. So if a company is listed, it means anyone can buy a part of the company and you become a partial owner if you buy shares in the company. So shares can range from a few cents to hundreds and thousands of dollars per share. Okay, and if you go and buy, say, 2% of the shares in a company, you own 2% of that company, so you get 2% of the profits of that company, and you get them in the form of a dividend. Okay, so the dividend is when a company shares the profit up among its shareholders. Okay, now we want to work out whether a share is a good one to buy, whether it's got a good value. We use this price to earnings ratio. So the price to earnings ratio is a current share price divided by the profit per share. Okay, so we want the current share price to be low and we want the profit per share to be high. So what we're looking for is a low value. The low value, the better the share to buy. Okay, so we've got two companies. In this example, company A has a market value of $20 and a 12-month profit of $101.85 per share is declared. So its price to share ratio for company A, price to earnings ratio is going to be 20 divided by 1.85, and it gives a ratio of 10.8. Now it's no good unless we've got something to compare it to, so we'll compare it to company B, whose price to earnings ratio is a market value of $50 and its profit per share is $3.30, so we go 50 divided by 3.30, and it's really hard to compare them because this is going to be, this has got a lower market value, so it doesn't look as good as the one with a higher market value, but we've got to take into account the profit per share, so that's why we need the ratio. So we have 50 divided by 3.30 and we get 15.2. Okay, so this is the lower one, so A is the best investment. Okay, you might need to pause that to get some notes down. And a last little bit is we're going to look at the percentage dividend yield. Okay, so basically the percentage profit we get from a dividend. Okay, so the dividend yield is a dividend divided by its current share price, just times 100 to make it a percent. Okay, and that's all that does is make it a percent. So Miller has 3,000 shares in a childcare company, and the current market price of the shares is $3.50 each. So his value of his shares interested in would be just these two things multiplied together. That would be the value of his shares if he sold them. What we want though is we want to work out how much he receives in dividends. So it's 40 cents per share. So his dividend, part A, is going to be 3,000 shares that he owns times the 40 cents, and that means he's going to get $1,200 dividend, okay? Because he owns 3,000 shares, and that's the dividend yield, how much he's paying. So, okay, and we want the percentage dividend yield for this share. Once again, this is just used to compare different shares, so we can see which one's the better value. So his percentage dividend yield for this share is going to be the dividend. So we're using this formula down here. So the dividend is going to be 0.40 divided by the current share price, which is $3.50, and they change by the moment, times 100 over 1, and we're going to get, that's an 11.4% dividend yield. Okay, it's really important you've got these formulas copied into your bound reference. You don't need to memorise the formulas, but you do need to know where they are and how to use them. So, there's a bit of work there, exercise 4A, tick sheet questions. There's a lot of common sense in this bit of chapter, plus a fair bit of work on just using percentages. You should get some good practice on that. Remember, I'm available in Teams chat if you need help. So all the best with that exercise, and I'll catch up with you next time.